You understand what I'm saying?
Yes.
So order block, I want you to say it with me, bro. Order block is not just one last candle
It's
before
a
we break the
series of
structure.
candles. Yes, I understand,
It
man.
could be a series of
Yeah,
candle,
it
it could
depends on
be
scenario.
just one candle. It depends on the scenario.
Yeah.
That is very brilliant. So now, example we are making, this one right here, number one example. This one right here, number one example of series of candle. Number one example of single candle. Now, let's move to another example right here. If I go to the 4-hour market structure right here, the trade I said I missed today, what is this? A high. This high was broken with this green candle. So which means, you see, if you were to mark your last candle out as your order block, this is the last candle, right?
Yeah.
The price came here,
No.
but I knew because we have series of candle, this area will be my area from here down. It's where I marked out. What did price do? Hold on. The body of the candle right here. Did price came here?
Yeah, it mitigated. Yes,
And
yes.
as soon as price came here, what did price do?
Just goes up. Yeah.
Now look, if I want to mark out my new order block for this trading now, this is my order block right here. This is what I'm looking for tomorrow. As soon as price retests this area, I'm looking to buy this market up. Because where are we going? We are going to this high, right?
Yeah.
Remember, what is the market telling us? We mitigate a higher time frame fair value gap right here, right?
Yes.
So we need to seek what? External
Yeah.
liquidity, the high.
Yes.
You understand? Let's
Yeah.
go back to the weekly. Let's see. Because that is why we start analysis from the higher time frame. So the higher time frame is the map that will lead us to where we are going. You understand? So the higher time frame told us that we have a fair value gap that market has moved in. So we are now looking for fair value gap 1 week. We are now looking for price to move higher to seek the high, right?
Okay.
So we having that in our mind, we now go down to lower time frame, following the structure of what market is making. What did market do today? Market now broke a new structure, right?
Yeah.
So where did market move from? Market moved from this area right here to break this high. So where is the next area? So we have this one right here, which is this other block. In this case, what is this? One single candle, right?
Yeah.
So that's what we are looking at now today. So if price retests this area, so from this body to down here is your whole other block. So whether price move in down well like a lot, what matters is that it doesn't take out this low. You understand what I'm saying?
Yes.
So it's still valid. Now we will now look for price to go higher. So can I say you now understand other blocks, even if not completely? Are you here? Are you here?
Yes, yes.
Okay. So I was asking a question. Can I say you now understand other blocks, like even if not completely, that it's not just one candle, it could be series of candle. Well, are you
Are you
busy?
busy?
Wasi,
Can you say it again?
what is going on with your...
I don't know.
I said, can I say that you understand other block that is not just one candle, that is,
Yes.
it could be
Yes.
series of
Yes.
candle. It depends on the situation.
Yeah.
Okay. So now, how do you view this situation? Let's talk about that. So before we go on, this is bullish order block. I'm showing you example, right?
Yeah.
So let's talk about the bearish type, like the downside of it, right?
Okay.
So let's look at these candles. We created a high right here, right?
Yeah.
Let's see if this high got taken. You see, this high was taken from here, right?
Yeah.
Can you see what I'm showing you?
Yes, of course.
You see, this was a high before. Let me label it right here. It was a high before, right?
Yeah.
This high now is higher than this high, right?
Yeah, I see.
So what did we do? We took liquidity out from this high. So then what happened later on? This was the low, right? That
Okay.
went higher. Are you right? And am I right or wrong?
It's not that one in the middle, the low.
This was the low.
That's the low. Okay. But
Why
okay,
is it the low?
what about that one in the
This one
middle?
right here.
Yes, it's not the low.
Look at what happened. We create a high, we create a low, then we create
Okay.
a high.
Okay, I see.
You see, you
Yeah.
can see there is a black candle here, a
Yeah.
down candle, before green candle. After those green candles, what happened again? Black candles. Before a lot of green candles up. You see, that is why this is the low. Why is it the low? Because it broke above this one. You understand?
Yeah.
And it went all the way up. So now, in this case, we have a low and a high. What happened? Price broke this low right here, right?
Yeah.
So where is your other block? Remember, it's not just one candle right here. Let me put other block. O, B. You see? The price came back to test that area.
Yes.
When price tests that area, what happened?
Just went down. Yeah.
Bro, I'm not making this thing up. I'm teaching you the source right here. It's just for you to master it and navigate it very well, bro. You see the reason why I marked out that area? Can you tell me the reason why? Because it was the last higher candles that move higher before price now broke that low. You see? So there was an up candle here. There was an up candle here. Do you know the reason why we didn't take them?
Oh, why?
Because when we created this high, we moved down. This was the down we moved to. We create a new high. This high was not higher than this high.
Okay.
Then what happened again? We create a new low, a new high. It was not higher than this high, neither this high, before we now broke this low. So this was our initial low right here. Yes? If this candle right here move higher than this high, yes?
Yeah.
We will have a new low and a new high.
Okay.
So that new low and that new high is what we will be looking at for market to take. Then we will have the correct order block. That is why you know which order block is correct. This order block is trading within this high and this low. The same as this order block. It's trading within. So this is the low, this is the high. So whenever market came to break it, we will look at this area right here. So remember, we talked about breaker block, right? And mitigation block.
Yes.
This is when they are called unicorn. Unicorn is basically a type of a model, a type of style that is more than one in a particular place. So what do we have here? Why is it unicorn? Remember, a breaker block is something that do like this, then do like this, then do like this, right?
Yeah.
Because let's just say this is the high.
Yeah.
From here down, low, a high, then it will break it. What are we expect to do? We need to retest that area that we break, then continue going down, right?
Yes.
That is when it becomes a unicorn model. This is a unicorn model. So where is your breaker block? The last candle right here. You see?
Yeah.
We have this green candle as your order block. We have these two black candle as your breaker block. This is called unicorn model. It's when two kinds of POI are in one place. In this case, how you see it's one place. We have a breaker block right here, then we have these other blocks, right?
Yes.
It becomes two POI. So this is a breaker block. This is what BB, breaker block. BB, I call it breaker block. OB, other block. So you see, a breaker block and the other block is in the same spot.
Okay.
And in
Gotcha.
a situation like this, that place is very strong because it's like two defense against one.
Yeah, that's understandable.
It's like two defense against one. So it's very, very strong area. That is why price came here. It rejects that area straight away. And what?
So it's really powerful.
It's really powerful. Yes. When you have a unicorn model, it's really powerful. Two model in the same place. If I tell you this one as well is a breaker with other block. These black candles are your other block. This green candle is a breaker. Why is it a breaker? Because it took out a low. Basically, we have a low, a high, right? Oh my God, why is this stopping? Then we created a new low, then we break that area. You see?
Yeah.
It's also a unicorn model, the one of today. You see? If you look at this style, this is the bullish type and this is the bearish type. You see?
Yeah.
You look at it yourself. Do you think it's the same style or not?
The same style?
Yes, of course. So that is called a unicorn model. What is a unicorn model? When two points of interest are in the same spot.
Yeah.
It could be three, not just two. Like in this
Minimum
case,
minimum two, yeah.
it's even three because we also have a what? A fair value gap right here.
Yeah, that's true.
So this is like three. This is just two because there was no fair value gap. You can see. This is just two, a breaker block and your other block. This is three, fair value gap, breaker block, and your other block, this black candle. Is somebody understanding me?
Yes, man.
Okay. So now let's go again. You have seen how many examples? The series of candle, bearish and bullish, unicorn model, when two point of interest or 3 points of interest are aligning in the same spot. You have seen that as well, right?
Yeah.
And you have seen a single candle as your other block. That is the most important thing. You have seen a single candle as your other block, bearish and bullish. You have seen series of candle as your other block, bearish and bullish. And you have seen a breaker block. A breaker block is the one that always, first of all, take a low or a high before it changed phase, right? Because this phase was going higher, right? Now it now switched down. And this phase was what? Going down. What happened? It now switched phase to upside by taking out the current short-term high. So that is where you know them. A mitigation block, they don't take any high or low. They will just create internal like this. Oh my, why is this thing always stopping? Like this. It didn't take out any low, you see? It didn't take out this low before going higher, before breaking this one right here. That is what is called a mitigation block. And what does price do? Price will retest this area. to continue. You see,
Yeah.
this is a mitigation. Breaker is much easy to find most of the time. Mitigation is there, but you don't find them so easily.
Do you normally use them?
Yes, bro, they are very powerful, man. Very
Very
powerful. Yes.
Okay.
That is why, you know, institutional traders, yes,
Yeah.
they prioritize this point of interest. So that is why in the book you have number one, mitigation, number two, breaker. They are number one and two in institutional point of interest. If you look at here now, it's because both of them, breaker and mitigation, are called group one. They are basically in the same position. That is why you see they are the same style. I don't know if you notice they are the same style.
Yes, yes.
That is why it's called group one. And this one we have this like this. It took liquidity before it break, then retest and continue going higher. They are basically in the same spot. This just take this liquidity before it break this high. Before it break this high, because it was coming down. Then this one didn't take liquidity before breaking this high. So where do we mark out this one? Where do we mark out this one? You see the difference?
Yeah.
If I drag this one down, what did it do? It becomes a breaker. It takes liquidity. You see? But it didn't take liquidity. It didn't take this low. That's why it's called mitigation. Then this is a breaker. A breaker always takes liquidity. They always take a low or a high. So they are in the same position, in the same group, but the difference is that one takes liquidity, the other one doesn't take liquidity. That is why in your book is group as number one. So in this case now, let me show you how it's look. This is a what? A breaker, right?
Yeah.
Because it takes this low before price now break the high that took the low. So now I want you to think about it. Why is it so powerful? Because they are grouped as number one. If you were to use this candle as your order block, only this candle, right?
Yeah. So,
Now, what does this mean? What is this? A breaker. You see, price came to the breaker and moved away, not the other block.
yeah.
You understand? So
So
that is
you'll
why
miss the
they are
opportunity if you'll wait. Yes.
that is why they are very powerful. For people who doesn't understand that other block could be a series of candle, 1, 2, 3 candle, or 4 candle, or 2 candle. So they will be waiting for this market to come here. But if you also understand that there is a breaker and mitigation, you will just mark out this breaker or the mitigation and take your trade from there. Because in this case now, you don't need to wait for price to return to the other block. But you can use your mitigation straight away to take the price.
Yeah.
You understand?
Yes.
That is why you just have to know all the points of interest and know how to use them. But in this case, it's just unicorn model. We have fair value gap, we have other blocks, and we have breaker block. As soon as market get there, it took off. This should be like at least $10,000 or $20,000 trade today. But you know, too tired from the night shift, man.
Yeah, but the thing is, I already learned, this mitigation block, breaker block. I know how they are looking, But for
Okay,
me, it's
but
hard.
listen,
It's
you
hard
don't
to
just
see
learn
it,
it once.
What?
You don't just learn. You have to keep on repeating them.
Yes, yes, I'm
Okay.
not gonna stop, But the thing is, it's hard to see it, I'm just looking in this chart, and I
That
have
is
to
why
put the
we haven't.
lens.
We are growing, right?
Yeah,
Once we start taking about market structure, right? That is
yeah,
when we start to see them, because market has to break a structure before you can identify these points as a valid point of interest, as a valid order block, or a valid mitigation, or a valid breaker. Market always has to break a structure. If market doesn't break a structure, change of character, market structure shift, they are all the same for me, right?
yeah.
I don't know if you have gone through that book to that point, like MSS, market structure shift, or CHOC, CO,
Change of character. Yeah.
change of character, yes,
Yeah.
or break of structure. They are all the same thing for me. It's when market is moving in one direction, right? Now it's respecting that high that is being created. As soon as market change and disrespect the high, because if you look at this price action, market was coming down. What is he doing? He's breaking the lows and respecting the high, right?
Yes.
As soon as market break that high, what does he do? He disrespects this high now. That means it's a shift in market structure, because the market structure was bearish market structure. Now market just shifts market structure to the upside by breaking this what? High. So you can call it a change of character, a market structure shift, or a break of structure.
Okay.
But it's also different because it could not be a break of structure, because if you look at the higher time frame point of higher time frame structure, it could be this is just a pullback. Maybe the higher time frame is all the way like this, the market is just pulling back to continue going down. But because we are in the lower time frame, you will always see this kind of internal structure. We call them internal structure. But now when we start to teach you market structure, you will start to understand what is the meaning of this kind of structure, internal structure.
Okay.
Yes. It's just for you to tell me that I'm ready to move on. Then the next phase will be market structure. We just want to talk about breaker, mitigation, other blocks, and fair value gap,
Okay. That's
and the
good.
highs and low. Because highs and low are the most easiest parts in this thing. Because you can spot them, it's not hidden. This is a low, this is a high.
Yeah.
This is a low, this is a high. Now we have a new high. You get?
Yes.
So their lows and highs are very easy to spot. Fair value gaps are very easy to spot. So your other block, now you start to understand it much better, easy, because it's not just one candle, it could be series of candles. You want me to show you something right here?
Okay.
This was the 1 week fair value gap, right?
Yes.
So I want to ask you, when market was coming down, how was market coming? A high, a low, right?
Yes.
A high, a low, because it's lower than this low. You see? The market shift up. You see a green candle?
Yeah.
What does market do? Market now moves down, right? Move down into where? Into this area, right?
Yeah.
Okay, now there is a question I want to show you, because if market move into your point of interest, market has to shift its structure. Where did you see that market shift its structure?
Green candle. Maybe there.
Right here. You see?
Yeah.
Because it
Okay.
was the last separation before all these candles. If you look at all these candles, 1, 2, 3, 4, 5, 6, 7, there was no green candle within them, right?
Yeah.
So which means the structure in this case was here, here, and here. So if market now break structure from this point of interest, right, it becomes a what? A market structure shift. What is it? Break of structure, change of character, change the state of delivery. What is MSS right here? It becomes your MSS. Now, you want me to show you something again that is so funny.
Okay.
Look at this low. 1, 2. They were low, right? After market broke this structure, right?
Yeah.
So I want to mark the body of this candle out for you. Did you see this low touch this area?
No.
This low, did it touch this area?
No. No. No.
When did the market touch this area? Right here, right?
Yeah.
Okay. Maybe you are understanding market structure now. A low, a high, a low, a high, a low, right?
Yeah.
What is this?
Break of structure.
Break of structure, market structure shift. It doesn't matter. It's just up to you what you call it. They are just names. I want you to put that in your head. Whatever you want to call it, however you understand it, call it like that. Nobody is going to judge you for it. Nobody will tell you that you are wrong. It's how you understand it that matters. So look now, for our point of interest. You see, where is that point of interest coming from? Because we have the weekly point of interest. Market now shift structure, right?
Yeah.
You wait for market to return back to your point of interest. Where is your point of interest? Right here.
Oh.
And if market return to your point of interest, this high is what you are going to target. From here to this high. Now, what happened? You want to wait for confirmation. Where is the confirmation? Market shift structure right here. And where is your point of interest? Right here. That is why I was waiting today, bro. It's all about that map. You are following it step by step. When you are climbing a step, you don't just jump to class 5 of that step. You take the next step at a time. How do you think I'm going to lose this trade if I take this trade today? Because I already know the whole thing behind this thing. We have a what? Market right here, a shift market structure. Then this was a confirmation. We always wait to see a confirmation in this area. So if market failed to close above this high, right?
Yeah.
That means market will be going down more, creating what? A lower lows and a lower highs. But as soon as market shifts structure right here, breaking this high, it tells me that market wants to go higher. And where are we targeting this high? Because this market is moving, it came down from this high back here, so we need to seek it. So coming back to what I was explaining, this is what market repricing liquidity area, which is point of interest, your POI. What is it doing? Seeking liquidity. Where is the liquidity? The S time, the high.
Yeah.
Does it make any sense to you now?
Yes.
Good.
This is interesting.
Bro, market structure is sweet, man. Because once you understand market structure, I told you, this is the only two things I need to, because you know how to buy and sell, you know how to calculate this thing, like, okay, I'm only going to risk $100 in my trade. So you already know all of that. That is risk management. The main thing is your point of interest and your what? Market structure. Once you understand that, you nail trading to its fullest. You think people are making millions of dollars in this trading, you think like it's because it's just because we don't just want to be greedy. Because I know once market come here, it's going to move higher. I can put all my life savings in this market and win this market. What is that? It triple or quadruplete my wealth. But just for you not to be greedy, what about if it doesn't move there? So you lose all your wealth. You understand what I'm saying?
Yeah.
That is why we have risk management. We take it slowly by slowly. So in this case, I'm only risking 1,000. Whatever the risk will be to this up, then I will make it. If it's like 1 to 5, I risk 1,000 to make 5,000. Something like that. So just that's why we use risk management. It's not like we don't know that market is going to move that way. We know. That is why your strategy works 80% or 90%, then that 10% sometimes it will not work. So you don't know which day is going to be that 10%, that day that is not going to work. So imagine you put everything that day, then you lose it.
Yeah.
So risk management always have to be in check and in place. Okay.
Yeah.
Right. So now you can see we have series of candle as a order block, not just this candle. Did you see market came back to this down candle? No.
No.
That is why you have to know the structure and you have to know when to use it. And in this case, what is this area? Again, this candle, this green candle, is your breaker as well.
Yeah.
It's just unicorn modem, bro. So how do you know? You see, at the time when price was moving from down to this up, what did you see happen here? It was consolidating. Did you know why? Because this was a POI, a point of interest, right? It was your order block that moved price down. So price now returned back to the order block. You see, it was hesitating to go higher because it was an order block. Just because the higher time frame told us that this is a point of interest, so the higher time frame point of interest is stronger than this lower time frame point of interest. Because the higher time frame point of interest was positioned for market to what? Buy up. You understand? So
Yeah.
any other block, any fair value gap that is standing on the way will not hold price, but price may react off that area. I don't know if you understand what I'm saying.
Yeah.
Price will react off that area and it will not hold price.
I
Price will
see.
just go through it. That is why if your higher time frame is telling you something, that is what you want to follow throughout the week or throughout the month. There will be some pullbacks, pulls back. If it's going at a month, it's pull back, then going higher. But it doesn't mean that it's coming back to the low. That is why, what are all these pullbacks, right?
Yeah. Okay.
Pullback. There is always a pullback, bro, for sure. Market doesn't just move. If market is just moving, as soon as you take off from here, bro, we have already took out this high long time ago. If you just want to move straight, this pullback gives traders opportunity to trade. Imagine if this market move from here, so only people who caught it from here will be the people on this market. So this pullback gives a lot of people chance to participate.
I see.
I know, bro. You will get it very easily, very easily. That one is for sure, because for me to take some students, I have to be sure how serious they are. I don't just take any person.
Thank you, man.
So what is the next phase now? A breaker block, other block that especially is not just one candle. It's very important. It depends on the situation. So you already know that very clear. You know other block, you know your mitigation block, you know your fair value gap. Inside the point of interest, what is it that you don't know now? Because remember, these highs and lows, they are liquidity. So if this other flow is when market is creating higher high, higher low, higher high, higher low. So the other flow is what? Bullish, right?
Yeah.
So if the other flow is bullish, that means the liquidity part where we are targeting is the highs. You understand?
Yeah.
So what are the highs? Liquidity. The highs are what?
Liquidity.
So what are we targeting? The highs. So
But what about downtrend? It's in down part, no? It's lows.
we are targeting the lows. Yes.
Okay.
Now you think about this. I want to mark out low for you. This was a low, not like it's a strong low. Like this was a low. Hold on. What is this?
Liquidity.
No, I know, like just a low or something, right?
Lows. Okay.
So now take a look at these lows. Let's just use this.
Yeah, they are most of the cases order blocks,
Look at these lows, right?
Yeah.
Now, when we take out high, so market now shift structure right here. Where are you targeting if you take a trade?
Between them.
These lows.
Yeah.
Because market is now coming down. You see, it's taking out all of these lows. There was low right here as well. But it was inside your point of interest. I don't know if we take it out, but you see, did we take it out?
No, I
Right
don't
here.
think so.
You see, we took it out.
Yes, yes.
That is why your order flow is bearish now. What are you targeting? Lows. You can see?
Yeah.
It's just vice versa. If your order flow is bullish, what are you targeting?
Highs.
And what are these highs? Liquidity.
Liquidity.
Because people were selling it from that point. So they know they have their stop losses around that area. So we are targeting their stop losses. That is why it's called liquidity. What is liquidity? Money. If you are buying and selling in this market, what do you use to buy and sell?
Money? What do you mean?
Exactly. So money is liquidity. The market needs money to move. And for sellers to get stopped out, that means buyers are taking the market higher to stop out the sellers to take their money. And money is liquidity. So buyers need that money to add to their own money. The same for sellers. Buyers was buying here, buying here, buying here, buying here. When seller took over, what did they do? They took out the sellers right here.
Good.
Are you feeling the class?
What?
Are you feeling the class?
Yes, yes. Feeling.
Okay. So now ask me any question, something that you don't understand right now regarding the breaker block, the order block, the fair value gap, you know, the mitigation, something that you don't understand.
Man, I understand what you're teaching me. The thing is, I cannot see it, really good, the same as you are
That
doing.
is why you
It's
are
like,
just starting.
yeah, for you, it's
It's
just
nothing,
a
it's
couple
nothing like
seconds.
you will see right now. Exactly. This is very good because you cannot see it right now. Practice every time on your chart, rewatching these videos,
Yeah.
practicing will make you see them and understand them.
And also, for example, I tried, to mark some breaker blocks, also mitigation blocks. But the thing is, there is no like order block, There's supposed to be a order block. So it doesn't follow, the rules.
What do you mean, the rules?
Okay, if you want to make a breaker block, you need to have there in the middle order block. Is that true or not?
If you want a breaker block,
Yeah, there is
you,
supposed to be an order block.
so basically, you see this green candle right here was
Yes,
another block because it moved price down.
yeah,
That is why it's become another block. It breaks this structure right here. It's now valid, right?
yes.
So that means if price now move back there, we expect price to continue down by looking for confirmation in that area. But if price fail to give you that confirmation and move past that area, you break it, it now becomes a breaker block, and the last down candle before market breaks that area becomes the other block.
Okay, can I share a little bit my screen?
Yeah, 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 you will,
You'll
for sure.
understand what entire screen.
Are you already sharing the screen?
Yes, do you see it or not?
Okay, hold on. Maybe I have to stop sharing so that you can share. Let me see if I see. Okay, yeah, I can see your screen anyway, but yeah, I think it should be fine.
Do you see it or not?
Yeah, yeah, I can see. I can only see.
Okay, so you see what I saw, like maybe it's not correct, because here is not a order block,
Which one?
Here in the middle. Do you see it?
That,
That way?
listen, listen, listen. That, the one you marked out is a mitigation block,
I
right?
thought, yeah, mitigation block.
And the two green candles are other blocks.
Yeah.
You
So,
understand?
yeah.
Uh-huh. So it's correct.
So it's correct, yeah.
The mitigation block is correct, and the two green candle is your other block.
Okay, okay. So two.
You see the
Okay.
green candle up to the
Yes.
upside, they are your other block. Why is the other block? Because price now broke below that low and closed below it.
Okay. So but why you are saying that these two are order block?
Because market is going down.
Okay, got you.
You
Got
understand what I'm
you. So
saying?
yes, yes,
Market came down to broke that low.
yeah.
That is why the black candle there becomes a mitigation block, and the two green candle becomes your other block. It becomes a unicorn model.
Let's see. Breaker block.
Uh-huh.
Okay,
This
what
one
about
as well.
this one?
Which one?
Breaker block. Do you think it's okay or not? A
It's
little bit.
okay. It's okay. Let
It's
me tell
okay.
you something.
Yeah.
Let me tell you something. You see, one, two, three, four, five candles, the whole black candles,
Yes.
is your breaker block.
Gotcha. Now I know.
So, because those four candles were what? Were your other block before. You understand?
Yeah.
So now what happened? Market came into that area, failed to hold price to move higher to create a new high. He now breaks it down. Now all of that candle becomes a what? A breaker.
Okay. So it's good.
You
Yeah.
marking only the green can only the black candle is correct, but now I'm telling you that it could be series of candles, not just one.
One. Okay.
Yeah. And what is your breaker and your mitigation? They are a failed order block that failed to hold price. So market break them, they now become what? A mitigation or a breaker.
Yeah. Gotcha. Okay.
Uh-huh.
I was not sure if it's correct, you know.
Okay. So you finish sharing.
Yes.
Are you sure that is the only thing you want to know?
No, I wanted to be sure, you know, if that
Okay.
is a order block, you know, because there's supposed to be an order block. But
Mhm.
according to rules, you know,
No.
not
Who
accountant.
makes the rules?
What?
Who makes the rules?
I don't know. A lot of guys on internet, you know.
Nah, bro. There are things you will take from people, not everything, man.
Okay, yeah. So now I know that we have more, you know, a series of candles that can be an order block,
Uh-uh.
not just
Of
one.
course.
Yeah. Okay.
Yeah.
Think it's good, man. I have to learn everything, you know, I will rewatch everything and